Hello guys, welcome to the channel. In this video we'll be looking at the logic that I taught on the last video. I used the same logic that I taught you on that video to take a trade today. This trade was executed in Euro USD. If you remember well, I have shared the logic of always trying to trade after high probable daily high or daily low has been made for whatever that day is, for that day 24-hour session after the daily extremes have been made. That's the logic, the framework that we are using for this model. And today I assume that around 11:24 the daily high was made. I saw that price traded down and I wanted to get a fair value entry for my risk, and I waited IPDA to offer me a premium pricing, which it did, and then my risk was framed based on this assumed daily high. So my stop was here. Then I told you guys you want to see a fair value gap that price may possibly trade into. We don't absolutely require that it does trade into that fair value gap, but we want to see that being the draw ultimately, if it can get best case scenario target. So I like to shave something off after price moves in my favor, which I did around this low, and then I left 25% of my position to run to my ultimate target, which was below this low right here, which price eventually got to. So we had a tentative folder today on Forex Factory, and the market has been more volatile due to Trump speaking spontaneously without any set time as known beforehand. So that usually brings into the market a high level of risk and volatility. So as soon as I saw that the market filled this target, I continued to cover my full position. I could cover my full position in my best possible target. And I was speaking on the last video, if you remember, not to expect price to set the high of the day and then turn into a doji. So you guys don't want to expect that the market does open, goes up higher and goes further below, like as a closing price. You don't want to expect that, because that's not gonna get you paid consistently. I talked about that on the last video, and that's exactly what happened today. After the market took the New York lows, it proceeded to trend higher and continue the daily order flow, as we are trading consistently up on this week. So as you can see, my assumed daily high didn't end up being the absolute daily high. It eventually got taken over, so but it still got me paid. So this is how you can be wrong and right at the same time, with a if and then approach that is designed to get you consistently paid while minimizing your risk, and not so much of maximizing your profit, but getting you paid consistently. That's what you want in trading. That's optimal, that's excellence, and that's what is efficient. You cannot make money having a all or nothing approach. You cannot have that. A lot of you guys that have studied ICT for a few years and have failed to become profitable are trading with the all or nothing approach, and this market will punish you for having that type of flawed logic, because the market is designed in a way that it neutralizes a lesser informed crowd, and you want to come into this market with systems that are designed to get you consistently paid. And I will be delving more into the concepts and the things that I've discussed on this video on future lessons, but you want to be following this channel because I am bringing content that you have never seen before and that no other educator in the space can match except ICT himself. All the other people are not informed, guys. I know this price engine top down and bottom up, so you want to be listening to us, the people that are initiated, that are following systems that are very, very, very efficient. So just as price is efficient, your system has to be efficient. So you don't want to try to maximize your profit. You want to minimize your risk and aim for consistency. That's how you make it in trading, guys. Thank you for watching. Until I see you in the next video.